to where we're at now. My name is Spencer Pascal. I own 2 million square feet of industrial real estate between New Jersey up until Pennsylvania, $300 million worth of assets. And today I want to show you how I was able to get there in my 30s. Some of the things we'll be talking about is the stuff behind me, underwriting at a basic level. We'll get my underwriter in here. We're going to discuss some of the current projects we're working on right now. On top of that, we're going to talk about All right, guys, we're gonna get rock and roll for Facebook people. I see you guys all up on there in the comments. Instagram, YouTube, Zoom. I know Zoom's a little bit tougher for some people just because people are working. But we're gonna call some brokers. We're gonna go through some deals. I'm gonna show you some deals I'm working on right now. This is a free introduction course. If you've never been part of our course, we have a weekly course every Tuesday at 6 p.m. exclusively for people who are trying to change their life in the industrial world. We have a great group of people, over 200 people that are part of that program. And so some of the stuff we're going to learn today, the people part of our group have access to 24/7. The rest of their life, their packet's part of them. And so the courses are made to be a little bit slower because it starts to teach you from the ground up all to where we're at now. My name is Spencer Pascal. I own 2 million square feet of industrial real estate between New Jersey up until Pennsylvania, $300 million worth of assets. And today I want to show you how I was able to get there in my 30s. Some of the things we'll be talking about is the stuff behind me, underwriting at a basic level. We'll get my underwriter in here. We're going to discuss some of the current projects we're working on right now. On top of that, we're going to talk about how to get deals to the closing line, how to put packets together, how to look for these properties, and we're going to use the basics of things like LoopNet. A lot of you who are discouraged by that, I'm going to show you why not to be discouraged by it and why I was able to get where I am by using the basics of LoopNet. So mostly some of you guys are in the chat on the other social media platforms, but we'll go into that a little bit as the day goes on. Behind me, I'll show you a little bit about what's going on there. It's a property we're currently working on right now. 45,000 square feet, vacant property. Again, some of this stuff's a little bit harder when the property is vacant versus when the property is leased. What I like to do is I like to go into the basics and simply go through, let's not get out of there, and go through LoopNet, kind of see what LoopNet's showing. It's a great basis of understanding where the market's at when it comes to underwriting, when it comes to seeing what's for lease or for sale on the price side, getting to know brokers, getting to speak to brokers, and just the basics of that to learn right now. Some of you are a lot more farther along on the curve when it comes to this stuff. Some of you aren't. And so that's why we teach from a basic standpoint. It's how I learned, it's how I feel is you need to learn in this industry is from the basics of everything. So let's do this. Let's do. All right, I got to remember to keep getting people in here. All right, move this screen over. All right, so what I'm going to do is I'm going to share my screen. We're going to go into LoopNet a little bit. I know there's a good group of you guys on here from my weekly courses. My weekly course guys, I see you. I know you're on here. Stay with me as we go through some of this stuff. All right. So we're going to get into some of this a little bit. This week we were working on Tampa with my group. We had some guys, part of our group, that were interested in the Tampa market. We went through, we found some assets. We found some stuff that we can underwrite. We learned how to talk about comps a little bit. The difference between what one area is comping versus the other area is comping out, the exact section we're looking at. So what are we looking at class-wise? When we talk about class-wise, we talk about flex space, large bay warehouse, manufacturing, last stop shipping. So your group of industrial class, essentially, we start to look at, all right? So what I'm going to do is I'm going to go to a different market. I'm going to stay. Let's see. Let me go to the chat real quick and see what market some people are looking at. All right, that's a good one. Let's do the Austin. I like that one. Austin, Texas market. All right. I actually like this market a lot. I love to be inside this market. I haven't put any time aside to be in this market, which is probably a problem. But as a market and a hold, I think Austin's a great market. All right. So again, here's a property right here you guys will see. Now, some of the concerns, okay, $1.8 million for it, 7,500 square feet. I don't know if this is a whole building. Let's see. All right, it is a whole building. So these are popping up everywhere. Oh, now I see it. So this is more condo style, right? So you don't get the whole site, you get a unit. I typically like to stay away from that stuff. In my opinion, you don't want to be part of associations. Here's another one. I think it's the same thing. Yeah, it's this condo thing on. All right, let's keep going. Let's see. Great to use for comps, though. Here's another one. Let's see. It's probably, yep, another one. Let's keep going. Let's keep going. We don't want condos. We don't want no condos. What's this? All right, here's a whole building. Nice and scrappy. It's great, great way to learn. All right. All right. So let's start with this building. So it's an industrial building in Austin. 10% rent growth, probably fixed at that. Let's see what we're looking at. $13.90 triple net. New lease extension, blah, 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 10%. Okay, 15 Austin. What am I looking at here? Let's go, let's go, let's go. Let's take a look at the OM. All right, all right. 6% cap. Guys, remember we talked about that cap rate, all right? I have a little thing in my head. I always thought you obviously have to be above what the current interest rates are. Interest rates are obviously definitely above that. 10,000 square foot building. 39, about an acre. I got some outside storage. It's an iron company. Let's see. All right, lease term. Let me know if you guys can't see this. Let me get into this more. Oh, here we go. All right. So here's your lease term. All right. So purchase is 256 cap, obviously way too expensive. NOI is 150. Base rent's at 1390. Purchase 270. Okay, 10, 10. 3% escalations. So that means every year there's 3% increases on the rent. So if they're currently paying 1390, there's 3% increase. So just take that number times it by 3, and that is their increase. Let's go to term. So 5-year, 3 years plus 1 year option or extension or option basically. Mic volume is too low. Let's see. Oh, I got the wrong mic, guys. Hold on. Let's change that. Give me 1 sec. All right. Test, test. All right, that should be better. All right, so let me go through it again real quick. Investment summary. All right, so when we look at the investment summary, this is inside of a packet, guys. So this packet is, like I said again, this is on LoopNet. I can look at the packet. I can get a base underwriting on this, right? So have that in your head real quick. Let me see where my marker's at. Let's do a base underwriting on this, right? So we'll take this off. My base underwriting, right? My investment summary. And again, I'm harping on this because you can go on LoopNet and you can get all this stuff, right? You don't have to get crazy or anything like that. This is a great starter building, 10,000 square feet in the heart of Austin, Texas. So your Texas guys out there, look, there's good stuff on here to get started with your portfolio, okay? So you have, let's see, you have 10K in square feet, right? Let's see what else. My NOI. My NOI. These are the NOI is 150. Let's just say 150K. Okay. Square feet is 10,050. Lease term 5 years. All right. Again, this is all simple stuff, right? Because I'm not finding a vacant building where I got to put all this in. I got term. I got good square feet. I got a good NOI. I got a bad price. All right. My lease term's up in 2029. So this guy's got less than 5 years. It's an iron company. A lot of times they have a lot of environmental issues. So keep that in mind. Some of these iron companies have environmental issues. What else? Oh, asking. What's our asking price? Sorry, guys, I broke my shoulder up here, so I can't really lift my arm. Asking, let's just say 2.5. all right, which comes out to basically a 6 cap. Okay. So I have the basis of what I basically need to figure out what I could pay for it. And I always tell them when we're learning, okay, even though the cap rate doesn't work, what would it take to make the deal work, right? What do I need to do to make the deal work, okay? So I can at least put something in. I don't have to dequalify myself, but sometimes you could put the wrong thing in and not qualify yourself based off of how your letter of intent looks, all right? So let's do the basics. Good. Big ChatGPT guy. I always like to utilize that. So we're going to go into here. I have a 10,000 square foot building. I have a 10,500 square foot building with 4 years left on the term. The NOI is 150K. They're asking 2.5 million. Give me 2 offer structures at 7.5 cap and 8.5 cap. All right. Then I'll let chat go to work. All right. Now I'll go over. Oh, shoulder. All right. The first, second offer. All right. 7.5 cap. We're at 2 million. Okay. 8.5. We're at 1,650. All right. And this is at an 8.5. And this is at a 7.5. All right. So we're not too far off, right? We got one that's 500 off. I mean, they know that you're not selling anything out here for a 6 cap. All right. I'm in one of the best markets up in New Jersey, and I'm maybe could possibly get close to a 7 cap if I had what's called a 1031 exchange. Other than that, we're not getting up there. So even out in Austin, Texas, a building this small, it has a tenant in it. You don't really want to waste that time on there. So, all right, how about let's do this? All right, current interest rates, do it at 7.1% interest on a loan, 10-year. How much is my mortgage per year? All right, guys, so remember, 70% down, so do that. We'll do a 70%. The bank will take, bank, all right? Our investors will take the other 30%. All right. So if we did that with our down limit cash flow, blah, blah, blah. Let's say we do it at, let's say we do it at the 7.5 cap, okay? We buy it at the 7.5 cap, all right? Our debt, right? So that's where that ratio comes in, where people are like, okay, my 9-to-5 job, I want to not have that 9-to-5 job anymore. That debt to income ratio needs to change. You need to put more money down, but I would never put more than 30% down at that point. The cheapest money you're going to get is from the bank. That's 70%, right? So even at that, my NOI, right? My NOI being 150, okay, right? In cash, right? The bank, no matter what, the bank's always going to get their money, right? So I owe the bank out of that, right? That debt, 118K, right? So, that leaves me with 32K after. So, right, am I doing all this work to make $32,000 a year, right? Some people have different standards. I'm not going to buy a property unless I can make 100K a year, 50K a year, $1 million a year. So even on your debt service, right, you still, in this, hopefully, remember we talked about that CAM, hopefully the tenant's paying all the expenses on the property. So that is realistically your cash flow at the end of the day. That realistically could go into your pocket and your investors and stuff like that. And let's say you have 30% investors. So some of this has to now go to these guys, right? So what you have to look at the end of the day is how much am I taking home from that? if you're only taking a certain amount from that, right? If you're only taking, let's say from that 32% or $32,000, right? I'm going to take 30% of that. I'm only taking $9,600 a year home, right? So I only get to take 96K home from that. So all that work, I'm taking $9,600 away from. What I want to do is at least make that $32,000 a year. So you can see how it starts to get chopped down, chopped down, chopped down. But again, this is not a hard deal to do at the right price. It's not a hard deal. All right. So let's go back a little bit. Trying to make it easy for you guys to see, exactly exactly what you have to do, exactly what you need to do to get there. All right. So we're going to get out of this, right? So we looked at that building. Let's keep going. All right. What's this? 11,000 square or all right, so here's some new build. This is getting really big and popular. People making these basically crappy little buildings. They're sheet metal buildings. They're going for grip. 11,000 square feet, $218 a square foot. Probably costs this guy about 80 to 90 bucks a square foot to build something like this. All right. It's a great starter way. They just, you want to be the seller on this, not the buyer typically. I love the scrappy stuff, so let's find that scrappy stuff, okay? Here's a little retail building. Might stay away from that. Keep going. Let's keep going. Guys, remember, we have the largest correction happening this year because everything's going to start maturing, and you have to be able to have the money to do that. And what I mean by that is all the real estate stuff is maturing this year from COVID. When everyone paid the really, really, really high prices, that's all changing now. Multi-tenant, we'll stay away from that. Stay away, stay away, stay away. This is good. Okay, so go in right here. Looks nice, not bad at all. Okay. A little marketing brochure. For sale, 18,000 square feet. Everything looks like it's in the 200 per square foot. All right, so here's your rent roll. These guys have really, really bad increases, 1.5% increase, right? They have 2 years left. Looks like they're in the whole building. Right off the highway. This is good. I like that. All right, so let's go back to that quote. Let's see if we could kind of figure out what we can offer. I have a 18,800 square foot building. The net operating income is $545,000. I want to offer them an 8.5 cap. All right, let's see what we get. Let's see. So, utilize what you have in front of you. Use these chats. All right. All right. So based off of this, right? Offer price at an 8.5 cap based off that income comes to about $6.4 million, guys. I mean, look, that's 341 bucks a square foot. It's cruising right along out here. I think that's way too high. You know, I don't know. I don't know. I think maybe if I do, let's try this. I think maybe 200 bucks might be better. I mean, they're cooking along on that rent, absolutely cooking along. Maybe that's why they have the ones. All right, let's do 200 bucks times 18,800. 3.7. I mean, it cuts it in half almost. At a 9 cap, you're at 6 million. I'm assuming they're probably asking probably close to 7.5 million. You guys want to give them a call? Let's see what they say. My guess is that they're probably at 7.5 million, somewhere in the mid to high sevens, for this property. Okay. Take off the screen recording real quick. Excuse me. That's my guess. I would be a 9 cap guy at 6 million. So let's call this broker and let's see what they got to say. Let's call Will Hall. 210 284-7184.
As well.
Hey, Will, Spencer Pascal, how are you?
Good. How are you?
Good, good. I'm giving you a call about the 901 property you have in Austin.
Let's say it again. Which one? 901 Rainley?
Yes.
Oh, okay. Yeah. We're asking 4.715 million. Just call it 4.7 for a round number. The tenant in there, Radiant Plumbing, is in there until November of 2027.
Okay.
They're paying 22.5 in rent plus triple net. They plan on vacating. They need to upgrade their space and kind of get some more, just a little more square footage. So they will be out November of 27, but they are currently in there for now.
Okay, okay. What do you think rent-wise would be coming in there next?
Probably like 16 to 17 bucks a foot. And that's relatively conservative. I think you could probably ask 18. I mean, it's extremely infill. There's a little bit of yard. The office is actually very built out and kind of it's in good quality. They've kind of redone it and put a lot of money into the office. So the office actually is pretty nice. I bet you could probably ask 18 bucks and you strike. You might find a tenant that's a perfect fit that might need it at 17.50 or 17.75 a foot, but I would underwrite 16 bucks a foot.
Okay, okay. And let's see, I'm just trying to go through this. They got some outside storage, I could see. That's no problem. You guys do leasing or no?
We do.
Okay. Did you put this tenant in?
Yeah, we rep them. Yeah, we do. And honestly, after these, I'm kind of doing some quick math. I mean, I think you'd probably ask more on the rental rate. Like the office quality, I mean, it's like 4,000 square feet office, and they put a ton of money into it. So I think you're probably closer to like an 18. I think you would strike at an $18 rent.
Okay.
Sorry, I got a lot of different deals here, but
No, no, you're good. All right. And so, what is that coming out? Yeah, I mean, there's cap rate's tough here because they're leaving in a year, or two. All right, fine. Let me underwrite this real quick with a couple of my guys, and let me see kind of where I bounce around here. Is this your only listing you have in town in Austin?
no, it's not.
Oh, okay. If I give you my email, can you send me some stuff? You have anything bigger than this?
I'm trying to think. Yeah, I mean, I got some stuff up in Leander that's like 50,000 square feet.
Yeah, like that.
Yeah, I have a couple different options. It's hard to think about like everything off the dome right now. But have we spoke before? I think you're at what company are you with again? I remember you trying to buy in Austin, right?
I haven't bought anything in Austin. I'm a Commerce Park Investors.
Okay.
So it's my company. I buy all industrial all over. So, but trying to tap into the Austin market, I like it. So is this your cell?
Yeah, it's myself.
All right,
And for this deal, I mean, I think we're asking a little. I mean, that's our ask, right? Like,
right.
You can pay for something in. I mean, have a little room. And I think I forget the cap rate on the in place, but I think it's like mid fives. It's pretty tight.
Yeah. Oh yeah.
I think if you offer like a mid 6.5, like we could maybe try to push to do a deal there.
Yeah, I mean 6.5 is going to be tough for me just because the fact that then the tenant leaves. I have this. I'll shoot you a text with all my information. If you just want to shoot me an email with whatever deals you have going on. I like the bigger stuff only because I'm based in Jersey. So I'd rather be able to like once I buy some in one town, I feel like I end up buying a couple things in that town. So yeah, let me.
Do you, I mean, obviously you probably like value add kind of.
I'm an all value add guy.
Yeah.
Yeah. But look, sometimes I can make certain things work. I'm pretty creative. I buy about 500,000 to 800,000 square feet a year, on my own and everything with my team. So it's not an issue, but
Do you buy any iOS or is it mainly just kind of tilt wall industrial type stuff?
I'll do iOS. That's not a problem at all.
Okay, that's kind of what I've specialized in the last few years. I mean, I'll do some more like tilt wall kind of metal warehouse, but typically it's middle market stuff. Sub 100,000, maybe 150,000 square feet. Usually not the big bombers out on the highway and stuff. But
yeah, I mean that's just such a tough market, especially in Austin. You got all the big guys doing that. I mean, like honestly, I'm such a scrapper. I love like anything that looks like basically like dog shit. I love that stuff, and I can go in and fix it up, put some money into it. I'm not scared of that at all. But something like this, like I'm even not scared of that either. I know the tenant's leaving in 2 years. I just have to prioritize that, but I can't be at a 6 cap or anywhere near that. Just knowing that, I have 2 years to lease it out, but God forbid something happens, a big risk.
Yeah, no, I'm with you. Makes sense. We'll come in where you need to come in at if you like it, and we can go from there. But text me your email and everything, and I'll put it in the notes. And I got a team of like 4 or 5, so we're churning stuff up, and we're cold calling every day. So we do a lot of middle market stuff, 700,000 square feet,
All right, fine.
capital type stuff.
I'll do that, and I'll send you my website. You can take a look at all my stuff on there, and you'll be like, okay, I know exactly what this guy's looking for, and we'll go from there.
Cool, man. Good to meet you.
Thank you. Bye bye. All right, guys, you see that conversation I had on there? That was like, never once did he go, what's your qualification? He went right into telling me. Now, I figured that's a 6 cap. That's not going to work for me at all. Believe it or not, on the outside, if any of you want to go with me on that deal, I'm going to actually throw in an offer on that because I think it's actually going to be pretty fun. Hold on one sec. I'm going to go grab my underwriting guy. I'm going to actually show you guys how to put an offer in. I would love to be in the Austin market. Not at that cap rate, but I'm going to have my underwriter come in here real quick, and we're going to underwrite this, and I'm literally going to show you guys how to put an offer in real quick. So hang tight for a sec. Hang tight, all right? And all you new people getting in right now, just hang tight for me real quick. I'm bringing my underwriter in to underwrite this deal. I'm going to actually put an offer in, show you guys how to do that. Hey, Nick. Come here a sec. Yeah, but I want to put an actual offer in real quick. Yeah.
Are you live?
Yeah.
Okay, I'm coming from.
You can. You can.
Get in front of the camera.
That mic sucks because I don't have it up high right now, but Nick's gonna need that because he's coming on.
Oh. That's
Yeah, why don't you
Nicky volume?
no, why don't you send me your
Oh, look at this, dude.
why don't you send me an offer thing? We're gonna put an offer in on this deal. And I'm gonna show them how to put the offer letter together.
So I'm just gonna send you
Not
the
bad.
template. You'll take out all the information and then we'll add it in as we go through it.
Yeah, that's good. Send it to me and then you can go through it on here. There's Facebook.
Oh, no way, dude.
Yeah, we're live.
Look at us.
All right, guys, it's my property manager.
What's up, everybody?
We got a young team.
Mm-hmm. That we do.
Any of you who are part of our Pascal Zone roadmap to your first deal, this summer he's gonna be your guy showing you how to property manage your stuff
Looking
yourself.
forward to it. Oops.
Mm.
A lot of alarms.
Guy has a lot of alarms.
We'll make it a little smaller.
On the line.
On the live.
Yeah, looking forward to it. It's gonna be fun.
Look at this. So we recalled this broker because I was showing him how to buy some stuff on LoopNet. Found this deal in Austin, Texas. Actually called the guy. He's got a bunch of good stuff. This tent's leaving in 2 years,
Look at that.
and he won a 6 cap.
There's
I mean, they're out of their
There's
mind.
gotta be a ton of this stuff down in Texas.
Yeah, it's 18,000 square feet. I like it so much. I'm like, I'm gonna actually put an offer in with everybody on
Yeah,
here now with
really?
Nick. Yeah. But then the guy's like, I have a bunch of
That's
ISO
a
stuff.
Retreat. That's pretty cool.
Yeah, he has a bunch of that. So you know that deal we're doing in Linden where we're buying the outside storage and everything, right? So
Yeah.
he's like, I got a bunch of that stuff. So I totally want to do that. Meanwhile, the
All right.
acquisition guy's just like dragging
Here
butt.
comes Nick, everyone. Get ready.
Yeah, everyone's gonna leave the chat once Nick gets on. Yeah. What are you stealing? Oh yeah, I thought she was here. Oh, now wait, you got the mic? Oh.
Yeah, put it back in the cradle.
All right, so here I'll download this real quick.
Thanks, and hi.
Hello.
All right, here's your. You had some chicken scratch on there because you want the chair.
No, I'll stand over to you.
Jay.
All right, here's this. It's in Austin, Texas. I'd love to get into that market, right? So I just talked to this broker for 18,000 square feet. This guy's paying a pretty good rent, $14.30. He told me it's between a $6 and $17 market, but the tenant's leaving in 2 years, and they're currently at a 6 cap right now for the tenant leaving. So I think let's underwrite this at like a 9 cap. I can give you the crypto. It's. He said they're asking 4.7, which that math didn't make sense, but it doesn't matter. It's 18,000. You want the board? Just use the board. It's right there. All right, it's 18,863 square feet. The current NOI right now is 270. Okay. I say you go in at a 9 cap.
What are they asking?
He said 4.7, but that didn't make sense.
It's a 5.7. So you're gonna need probably 2 million, get you 9K. No, sorry, 3 million.
3 mil.
Yeah.
All right, 3 million. Because I mean, look, you have about a year and a half to go find a tenant. So even if you got the same rent, it's pure triple net. Any of you who are on my weekly calls got much better handwriting than me. We'll start getting them in this summer. All right, now.
Okay. Yeah. All right, so they're currently paying 14.
They're currently paying
1463. Hold on. 270 divided.
14.32 right now.
Yep.
But yeah, they have it right up in here.
All right. Yeah. So that
With 1.5 increases, which sucks.
yeah, it's pretty bad.
So, you know, their second year they get to
They have any options?
no, they're leaving. At the end, that's the
Confirmed?
firm. Yeah, yeah, yeah. All right, so all right, guys, I'm gonna bring.
16, $17 market.
He says between 16 and 17. He put it on the market for 18. It's not a bad looking building, honestly. I'm going to share the Word document with everyone. All right, guys. So below is my letter of intent to purchase for some of you who want to see what that looked like. All right. So we go through everything. Square feet. We said it was
18,863.
18,863. Offer is 3 million, right?
Yep.
We'll take out deposit.
Yeah, you don't want the deposit in there. It's just another hiccup or roadblock for the
Yeah,
seller.
depending at like, so we're just putting an initial offer in just to get like our boots kind of dug in there a little bit. So we'll do all cash, doesn't matter if you're doing all cash or not. What you want to do is be able to get in there, get them to be like, okay, I like what I'm seeing. You know, obviously this guy's probably not going to take this price, but it's at least a starter. Let's purchase shall have, I'm going to do 60 days because it's all in 60 days of due diligence, blah, blah, blah,
And get rid of that.
and 30 days to close.
Delete that. That's from mine.
Which one?
The app.
Here, you take over.
Looking good, boys.
That's it. I'm gonna text the guy back. I have an offer in your desk right now. Hold on, let me admit this guy. You want to
Yeah,
purchaser
sure.
at?
There, now you got 30 days to close.
Oh, there it is. Okay, cool, cool, cool. Offer expires 10 days. We don't know who these people are, so we're just gonna get rid of that. Commission, no commission right now. Get rid of Roy, put Spencer. All right, guys, you see how quickly I'm going through this? Boom, boom, boom. All right, did we get everything? Title service, blah, 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 blah. And guys, most of the stuff you'll get ironed out as you go through your contract. This is initially to get in. Oh, we got to get the right address. That's going to help, right?
Yeah, fix the 6,600,000.
Oh, yeah. Go up to here.
Greenlee.
Something like that. Holy shnikes, not going to long, dude. Greenlee.
Done, y'all.
Let's see, we can bump the NOI. How's it look inside? Do you have any interior pictures?
Yeah, I have 3 million.
Just get rid of the 100,000.
This light in the corner is like beaming my eyes right now. 3 million. Okay. Yeah, this is. No, look at the highways all around it. It's just covered in highways. Nice big building, pond view.
Hey, it's waterfront. You can increase the rent.
Look at this. This building, look at all this. 290, 35. Great highway. And you can enter, pull up the building, boom, ran to the highway.
Yeah. Got nice neighbors.
You got 1 tailboard, 2 drive-ins, plenty of outside storage. You know, great warehouse,
Looks nice inside.
right? Nice front a little office up front that looks nice. Gated. Yeah, I think it's a perfect asset to add.
If I were in Austin, Texas, I'd be submitting this offer today.
Yeah, but now I have everyone on this chat who's doing the same thing. All right, what else am I? Oh yeah, I got to take this, right? All right, I'll let you clean that up real quick. You got the magic. He's got the
What's the
magic
broker's name?
in me. Oh my God. Whoops. Oh, there you go. Yeah. Will. Big Willie.
Slow.
Yeah, I don't like when the mouses are so fast.
Got Howard Weinberg calling you.
Yeah?
Yeah.
Yeah, I called him by accident. These brokers just keep calling, Nick.
Listen, got to get as many deals in front of you as possible.
That's it.
All this is a numbers game. You have 100 deals, one of them's bound to work.
All right, guys, follow this. See what we're doing here. See how simple the sheet is. Nothing insane, nothing crazy.
You know, your qualifications also go in this little blurb. Obviously, we have a website and own about 1.8 to 2 million, consisting of over roughly 54, 55 properties. So it definitely helps.
It definitely helps, but if you're starting out, you could definitely put, look, I'm gonna just put real estate investor with multiple deals. Keep it something simple. A lot of people don't have websites, so you don't need to put your website in. It could be a small thing about you. Mine's a little bit bigger. I've obviously had a longer amount of experience, but when you're starting out, keep everything simple, right? Again, it doesn't matter if you're doing cash or not. When you put it in there, you're trying to grab people's attention.
Yeah, the general just, you know, straightforward, simple, professional. And as Spencer said, you're trying to grab attention, get your foot in the door and get the ball rolling on acquiring a new property. Yeah, so, I mean, what was that all in about 30 minutes you did that? From finding the property to having an offer ready to go?
Oh yeah. So going on LoopNet, telling everyone, like, you know, at the end of the day, LoopNet is a great, you know, a great thing to find. People harp on LoopNet so much and say like, oh my gosh, like, you know, it could be worn out, could be used. Look, guys, I went on LoopNet, started my entire career out on LoopNet, trying to get into brokers' hands. All right. Did you email that to yourself? Oh, hold on, sometimes people keep bouncing in, bounce out. You know, I spent a bunch of time learning on LoopNet. Speaking of brokers, creating that relationship. Okay. And when I tell you, you need to make that relationship, I literally just call this guy, say, is this your cell number? Okay. Yeah, that's my cell number. I'm going to text you all my information. Send me what else you have. He was like, I got a bunch of stuff. Okay. So what happens? Maybe I end up not buying this, but he ends up selling me 2 or 3 other deals down in Austin. Now I'm in the Austin market all of a sudden. Okay. There's no need for me. That's a, 3.5 hour, 4 hour flight for me to go down there. But if I could pick up 100, 200,000 square feet of industrial, it's totally worth it, right? This is a single tenant building. That's easy. Lease that, triple net, talk to you every 5 years, right? So how many times are you calling, dang, how many times are you calling brokers based off of something, even if the math, look, guys, the math didn't work, I'm still sending in an LOI. And how many times have you said, hey, what else do you have for sale? So you want to email that to yourself and then get that guy's information, then we'll send it over together. Great little deal, guys. Guys, we're going to find another one, so stay on, stay on.
It's a weird street name.
Yeah, that's going to be a tough one.
Greenlee. But hey, who cares about the street name? It has nice upside potential.
You just got to make sure you're getting the vitamin C gummies
Yeah. As you get older, you need to be healthy.
from our amazing tenant, pharmaceutical tenant.
Good Christmas basket.
You need some? All right, you lost. All right. I kind of like the. You
Did you go over the other Edison?
went through here and sent it to yourself?
Yeah.
Okay. Did you download the brochure? Let me send that to you. So you have his stuff. I didn't go through that Edison deal. Is that under contract?
No, it's available. Off market.
Oh, you found it?
Yes.
Or doesn't it work for our program?
I mean that example that's on this, I just for simplicity purposes underwrote it as if it's turnkey. Turnkey meaning there's no capital expenditures that need to be done on our side to get the full potential market rents, because if you're going to ask for full rents, you need the building to be more so grade A or class A real estate. And
Where's that property this guy just showed? I wanted to go into his thing. Dude, I'm loving. Austin has these tons of condos. People are just building all these condos.
I think
Here's 26.
in the last 5 years, I know I'm pretty positive, maybe even
Look how weird this industrial building is.
it's a lot of land. But Austin's one of the most, within the last 5 to 10 years, it was named the #1 city that had the most growth.
I love it. I want to see if this guy has any more stuff like on here. What is this company name?
Stream.
Stream? The name of their company? Let's see. Stream. Stream. Austin. Oh, they don't have a lot of good reviews. Property types. Industrial. Well, their website's not friendly at all. Office space for rent. All right, well, their website sucks. All right, let's keep going. You want to talk about your deal?
Edison?
Do your deal? I don't think I took rid of it. Do you have any, you want to pull it up on this thing to show them?
It's off market. I don't know if there's
Ah.
no OM or anything.
All right, go through it then.
Yeah, sure. So,
All right, guys. Nick, our acquisitions guy, he's going to show you an off-market deal he's underwriting. Fully vacant. Take a look at it. Fully vacant is a little bit tougher, but you could again remember we're still working on putting offers in. But Nick, tell them how you found this off-market deal.
So I found this deal by just calling brokers. It really is it's a necessity in trying to acquire real estate. As I said prior, this is a numbers game. If you have 100 deals that come across your desk, one of them are bound to work. So the more deals you have, the more probability that you are likely to strike a good one and move forward with it. So this was just going, like I said, calling brokers, and I found a nice team, and they deal more so in off-market properties. And this property is in a great market in Edison, New Jersey. And for simplicity reasons, I'll show you how I just underwrote it real quickly. So it's a 45,000 square foot building, as I said, in Edison, New Jersey. For those of you who live in New Jersey are probably familiar with it. Market rents there anywhere from $16 to $18. The building's fully vacant, and just to get through this example, I'll just say that it is turnkey, meaning floors are done, heat's in there, bathrooms are all ADA. We don't have to put in any money, capital expenditures. So let's get to it. So 45,000 square feet, like I said, market rent $16 to $18. I'm going to be more conservative here. I'm going to go with the lower 16, and then anything, if we get $16.50 to $17, $18, that's all just a bonus. So let's get to it. So what we do is we take 45,000 square foot, the square feet, that's the building size, multiply it by $16. Those are your market rents. We get $720,000, which is going to be our gross potential rent, or GPR. Okay. So as I said, this building's vacant. Assuming we find a tenant and lease the space to them, they're going to be on a triple net lease, meaning they are going to be paying for the taxes, the insurance, and their own utilities. So I'm not going to include that in any of the underwriting because the tenant is going to be paying for it. What I will include is just some reserves with an industry standard, roughly about 15 cents. That's going to give you about $6,750, and that's just for minor repairs and maintenance or any other small hiccups that may come your way that the landlord's going to have to cover. So to get our net operating income, which is the NOI, we're going to take those gross potential rents and subtract that $6,750, the reserves, and we're going to get $713,250. Once again, that is your net operating income. So let's see how much we can purchase this property for, where it makes sense to put in an offer.
But Nick, that net operating income,
Yes.
what is that? Is that just what the tenant's paying?
The net operating income is what the property is the cash you're going to have left over from your rents after you take care of your expenses.
Right.
So, yeah, so net operating income.
So not anything to do with CAM, not like landscape or anything. That's going to be part of the CAM, but like my net operating income, let's say I had a property manager or a fee, that would come out of that. Any debt service or no debt service?
No, debt service is not included. That you take after the net operating income.
And guys, debt service, that's the loan you have on the property.
Right.
All right, got it. So that's basically my cash flow after everything that I would take home if I didn't have debt on it.
Right.
Okay.
Yeah. So this is also, to Spencer's point, this is as if we were purchasing this property all cash, no mortgage. But if you do have a mortgage, you're going to have to factor all that in after the NOI. It does not go in before. So, things that you're going to subtract from your gross potential rents are going to be, to Spencer's point, landscaping, utilities, taxes, insurance, and then obviously the lease structure will jurisdict who's going to be paying for them and if the landlord is getting reimbursed for them. That's triple net leases is they're a must in this industry because the tenants occupying the space, so they're really they're utilizing it. They're using the electricity. Why should the landlord have to pay for it? We shouldn't. We don't. That's why we use triple net leases. So back to our how much we could, what kind of wiggle room we have with the purchase price. This is real simple. So they're asking about $215 a square foot, which is going to be about $9,600,000. For example purposes, I've just included a couple different purchase prices to give you an idea of how this, how the purchase price and the cap rate correlate. And the cap rate is the capitalization rate. That's essentially going to be your percent, your return on your investment. So what we do here is we take your net operating income and you divide it by your purchase price. So $713,250 divided by $10 million purchase price is going to give you a cap rate of 7.13%. Not great, not terrible, but that's why we really hone in on those negotiating skills to drive that purchase price down. Because the cheaper you get the property, the higher your cap rate goes. They inversely correlate, meaning when one goes down, the other goes up. So let's say that our negotiating skills are great. We can get, 9.5 million. You take 713,250, your NOI, divided by 9.5 million, that will give you a cap rate of 7.5%. We're getting better, but we still want to get that purchase price down. So this is really, your best case scenario, your $9 million. Let's see, you find something wrong with the property, whatever, you can use things such as environmental, any deficiencies with the property, bad roof, bad parking lot. You can use those to your advantage in driving the purchase price down because those are things that the landlord will have to fix. So let's say we get an accepted offer at 9 million. You're going to take your NOI, divide it by your purchase price. That will give you a cap rate of 7.9%, which we're doing better. And this is a great deal and a great great deal in a great market with a lot of upside, fully vacant. So, that's really, it's not that hard, guys. It's the hardest thing is finding the deal. That is, it's like I said, it's a numbers game. That's why you need to be calling brokers, speaking with at least 5 brokers a day in different markets so they can get deals in front of you. And then, you have to pick the one that works best and you run with it. But this is, it's simple division. It's nothing crazy that we're doing here. It's just knowing how to go step by step. And anything else you think that is noteworthy?
I'm trying to show everyone on Instagram Live what's going on, guys. Everyone who's on Instagram Live right now, all you that are behind here, doing all the hard work, you guys got to show up. Nick just showed us how to underwrite this awesome property. This is a fully vacant property, guys. Now, I forgot my mouse. Guys, what happens is, again, it is really hard. Now, how much do the numbers change, Nick, right? So as I'm going through, right, we're underwriting a fully vacant property. How much do my numbers change on here right now? Guys, granted, when we do our courses, we really slow everything down for you, okay? We slow it down so you understand what's going on, right? This is at a faster pace, right? I want to let you guys know Nick has been in this new role 3 months. Not even 3 months. And this is what he could do, right? Nick was part of our course. Nick learned how to do all the stuff we're doing on our course. He learned how to do that stuff, right? So when you're sitting here going like, I don't know if I can get to that level. I know there's about 80 people right now on, about 80 people on right now in other groups that are part of our course, all right? I got group number 1. There's 13 people in that group. There's a couple other groups on here, right? That in 2 or 3 months, you could be at this level. Right? You have to understand what your main goal is at the end of the day. But this is underwriting vacant. That's the hardest thing to underwrite because there's no income coming in. Tuesday, for all you guys who were part of my course, when I showed you that packet we did for that new property we're buying, that's a vacant property. I got to sell the fact that I'm taking your money and you're not going to get a return on it for a year. That's really, really hard. So what I want to do is I want to put you in a scenario where if in 2 months, all of you are part of our course right now, we're in our 2-month spot right now, knowing that you can get to this level, right? And by the way, just so you're aware, you guys see how I do it. I don't do mine like this. Mine's like chicken scratch and horrible. I'm thinking about bringing Nick in to redo mine. But look how clean this is, okay? It's in sections. property overview. Okay, what's going on? It's fully vacant. Next week could be like 5-year lease, right? He could then go down another level and work on that. Then he could come over here and he's working on that, working on that. Everything's sectioned off nice and clean. Okay? You can't be all over the place. I could be all over the place because I'm in a different spot, but you can't be all over the place. Okay? So, I know this might have felt like a lot, but hang on tight. And any of you who are asking for recordings, there ain't no recording. That's why this is free. The only people that will get clips from this, like how this was done, so you can watch it again slower, and some of the stuff like the phone calls I've done, if you're part of our program, if you want to be part of our program, just put in the chat a 1 or a thumbs up. I'll send you stuff. Other than that, it's only for my guys who pay for this. The free means it's free. You don't get a recording of this. Maybe you get a spot to look at Nick too. Maybe you get a chance to see Nicky more. But, so Nick, what I want to do is I want to re-underwrite this, keeping it the way it is, but 5-year lease, okay? You want to do a new sheet?
No, I'll just go off here.
Okay.
Here. What are they paying?
All right, let's say, why don't we use the same building
Yeah.
and just say, the broker told you between $6 and $18, all right?
Yep.
Let's do $16. I like taking the lower number. So let's say they're paying $16, 3% increases. Okay, guys, so we're taking the same deal, except the only thing we're doing different is we're just now going to add in what it would be if the same building was leased, okay? Let me switch some screens up here so I can see all you guys. All right, again, guys, if you're interested in being part of that course, put in number 1 or send me the info. I know someone in group number 1 has asked for it. We will get you that information. Just give me a sec here. Hey, Drew. What's that? All right, guys, so this is the same deal. It's the Edison deal. We're going to show you vacant, and we're going to show you at least, so you can understand how significant the difference is here, right? So Nick's going to do it, underwrite it real quick, and show you. You want me to take this, or you need this up real quick to see it?
You can take it.
Then he's going to show you exactly what that difference is, because it is major. One, as we raise capital, there's a major difference in that because you're raising capital with immediate cash flow. When you're raising capital and there's no immediate cash flow, that's the problem. Hey, do you have the link for people? I got 2 people in group number 1 who are interested in joining the course.
Sure.
Do you have that our new link with the 3 options?
Yeah.
Are you able to jump in this and just post it for those people?
Yeah, for sure.
I got 3 people now in group 1, and I got about 10 people in group 4. All right, yeah, I got a couple groups going.
Heck on.
What are we, triple net lease right now?
Let's do a triple net lease. And okay, so guys, while Nick's doing this, let me tell you a little bit about the course. Some of you are already part of it, and some of you don't want to hear the sales pitch. I have to put it on here because I had about 7 people who had to run out for some emergencies and wanted the recording, but I want to let them know that there is none. The course it's a 12-month course. It's every Tuesday at 6 p.m. They're all recorded when you're done. They're all 100% live. They're with me or my team. Right now, you're going to get all of me, okay? And you can use this course for any industry you're in. You want to use it for multifamily, you want to use it for retail, you want it for industrial, use it for industrial land development. We specialize in industrial, but the way we underwrite, you could still use that in the retail. Multifamily is a little bit different, but you could still take some of the same concepts. The last thing is, there's 2 packages, a month-to-month and pay in 3 months, or the yearly package. If you pay the yearly package, what happens is you get a free 45 minutes with me and a free 35-minute underwriting with me. You can use those at any point. I tell everyone to save it for the end of the year. Mostly everyone picks that course. We have 200 plus people part of the program, okay? And mostly all of them pick the pay in full because towards the end of the year, when we get to the end of the year of stuff, people start to find things, okay? And they start to utilize that stuff, all right? So again, that's gonna go into the chat any minute now. Sign up, be part of the course. For some of you who are jumping in right now, Nick is our head of acquisitions in our company. He just underwrote a property that's off market that we were looking at. It's vacant right now, so it's fully vacant. And so he showed everyone how to do that. That will be played in your recordings. Again, for that program, this will go inside of your program next week, okay? And then you'll have access to the recordings of how this was underwritten. If Nick did it too quick, you'll be able to watch it again and see how he did it. But what I wanted to do is I said, Nick, you know what's really hard for people to sell a building that is vacant. Why don't we give the people a scenario where the same exact building is occupied? So we're immediately going to get that cash on cash return to our investors. So before, this was the underwriting if the building was fully vacant, okay? Then I told Nick, I said, okay, you showed the people how to do it, okay? But again, that's really hard. You're going to get a lot of vacant buildings, but it's really, really hard to raise capital for vacancy. So I said, Nick, why don't we show people the same thing, but with it occupied to show the difference in that cash to cash return and the difference on how it's a little bit easier to sell, a little bit easier to push there. So my scenario to him was, okay, the broker did tell him on the phone it's between $6 and $18 a square foot. Okay, so I said, let's take the lower number, $6. I said it's a 5-year lease, right? So we get a 5-year lease at $16 square foot, fully triple net, which means the tenants are paying all those expenses back. All right. And so Nick's going to go through. He's going to show you guys a little bit. I'm going to step back and let him do it. But watch this, guys. Watch the difference in how this works.
All right. So I'm just gonna do triple net lease.
Do a triple net.
Yeah. So I'm not even gonna put real estate, taxes, insurance.
No, do all that
so-
because it would be a single tenant building, correct?
Yeah.
Yeah. So I would do it as a single tenant building, kind of like 36 Pine. Yeah, and the tenant's going to pay everything either direct or reimbursed. So do it as your NOI is 720.
You want NOI or something? What do you want me to take?
Or
out?
take how much you think?
Well, I could do
10% off that?
Well, I have a property management fee and repairs and maintenance for reserves.
So what's that? 8%?
I have a 3% property management fee, which is 21,000.
Do all the fees at 5. Do 10% or 8%. 8%. All right, so guys, we're gonna take that on that 720 gross gross rental income you say there. We're gonna take 8% off of that so then he can get to an NOI. Remember we said before NOI is after all those expenses, property management fees, vacancy fee, stuff like that. So that takes $57,600 off. Now our NOI, which is the money we take home, and a portion of that has to go to the bank, and the rest goes to us and our investors. All right, is 600.
Drum roll, please.
No, I don't want to take the spotlight off you. 66240. 66240. All right, there's our number. Go.
All right. So tenants in there 5 years, 3% increases. This is your current NOI right now. So the increases are so valuable because typically your expenses, you want to keep them the same. When you have increases, your income is going to go up, but your expenses should theoretically stay the same. So the money that you're getting off of the increases can then go to your investors through distributions. So it is imperative to have those increases. And let's see what we got here. So after the first year, your NOI, so like I said, increases are very important because the 3% increases are going to go off the 720 while this 57,600 is going to stay the same. So let's show you. So you could see, you're already taking in 20,000 more dollars, and you can continue to do this through year 5. And as their rents go up, your NOI is going to go up. But once again, your expenses should be locked in. You have a tenant in there. They're doing their thing. They're focused on their business while you just reap the benefits of owning industrial real estate. That's why owning industrial real estate is such an invaluable asset, because when you structure a lease correctly, a triple net lease, you don't have to do much. You answer the occasional, maybe there's a roof leak, and send out a roofer, and you have to, that's coming out of this 57,600 to, that's why you have that in there to account for the property management, any issues that are any exterior issues that the landlord has to cover. So, yeah, I mean.
What else? What else? Guys, what do we got questions about? That's what we're going to get to. What do we got questions about? I know there's a ton of groups, but what I want to do is be able to show you, like, at the end of the day, this is not hard. The concept may look hard, right? This may look confusing. This guy right here, okay, he's been with our program for many, many years, then got hired by us, right? Property manager, learned how to do demo, build buildings out, learn the financing side, learn the whole grunt side of it, right? Now he's our head of property acquisitions, okay? How is he able to do that? All he had to do is sit here night after night after night and learn, right? You know what he did that all of you needed to do is surround yourself by this. Eat and sleep and breathe real estate, right? So that's why my course is once a week, right? If my course is once a week, I get to keep you accountable. I send out videos. Some of you are part of this. Most of you got a video. I believe we sent out a video this week, getting you ready for the weekend. If you didn't, you're going to get it today about me telling you what I need you to do this weekend instead of sitting around, okay? How are you getting your investors out of the deal? That's Steve, great question. So a little bit, you're not getting your investors out of the deal. So Tuesday, we talked about a little bit about both sides. I call it the A and B option. Let me get Steve. Let me see where Steve is. Steve, you're group number 1. Let's see where Steve's at. Steve, you still on here? Give me a thumbs up if you're still on here, Steve. Oh, I see you. Yeah, I see you. All right, Steve. All right, so Steve, I call it a group A and group B. So what happens in my investor packet, my group A, right, when I go to my investors is 1-year holds. I'm going to buy the property for sale or for lease. Okay, you're going to give me your money. Let's say it's $250,000. That $250,000, my plan is to either 2 or 3 exit on a sale per se, okay? Then we have option B. My option B is for a long-term hold, 8 to 10-year holds. So after the 10 to 8-year holds, by then you can either refi, and refiing is not pulling your investors out. Steve, I want to be clear about that. And all of you on here understand that when you are raising capital, it works in a couple ways. Okay, I'm going to show you real quick. I'm going to go to the next board real quick.
But to Spencer's point, you recapture a lot more than enough, because when you sell the property, because your NOI is going up, which makes the property more valuable, so you can ask a higher asking price when you go to sell it, which in then turns your initial investment, you 2x it, 3x it, because time is your best friend with this when you have increases.
Exactly. So Steve, the refi, here's what happens. You give me $250,000. Let's say it's $250K. Again, some of you who are just joining, I broke my arm, so I have to write like a little weird.
Let me write for you.
Nah, it's all right. Everyone gets to see how horrible my handwriting is compared to yours. So $250K is my initial investment. Okay. My goal in that 8 to 10 year period is to double their money in 8 to 10 years. Now, a refi, even if I do a refi and I give them back, let's say out of that 250 grand they invested, I'm still going to give them back, let's say 150K. That goes back to the investor while they keep their $250,000 investment into it. My goal, okay, is to have this guy go, hey, do you got another deal I can put my money into? Is there another deal that I can put that into? Because refi money is cash. Refi money is tax-free. You can't tax on a refi money. So even though they got the 250 in there, they get 150 back on that refi, the property, they get that tax-free. So a lot of people will take it, go do what they want. But most of these guys, okay, I sold a deal last week. Most of those guys came back and came into my new deal, okay? but I'm giving them a portion of their cash back. I'm not, it's not a way for, it's not getting them, the investors out. My contracts, your sponsor sheets, all these contracts you make them sign, you're telling them, hey, it's between 8 to 10 year hold. All right. That's what that contract's doing to you. Now, how do you get your your investors out completely, Steve? Right. So take the refi out. You're not getting your investors out in a refi. You could potentially do that, but the problem is your investors are giving you money so they can accrue cash flow on that. Right? If I'm giving you 250 grand, it's because you're giving me 8 to 10% return on my cash. That's more than a savings account. So the last thing I want you to do is be like, in 2 to 5 years, you give me some of my money back and maybe a couple bucks more. My goal is to double that cash while it's with you and try to pay as a little amount of taxes as I can. Okay, you're going to pay more taxes. Let's say the interest rate's 3% in your bank account. You're going to pay 1.5% in tax on that. So you're only making 1.5% interest on your bank account. That's why you want to put it in real estate. Okay, you're also going to do in 2 to 3 years to do a thing called a cost seg. Okay, that will depreciate a bunch of the stuff on the property. I'm just using layman terms right now because there's a lot more to it, and we'll learn that in our course. And then that is a massive tax incentive to all of my partners, so they're not paying so much taxes on all their distributions. Okay, so the only real way, ethically, Steve, to take your investors out is to sell the asset. So you could do 2 things, or that's 4. Do 2 things. One, that 8 to 10 years. After that 8 to 10 years, okay, I could sell it. Okay, and when I sell it, I can return the cash back to my investors, the original investment. So if I buy the property for, right, let's say I buy that property for $5 million and then I sell it for $7 million, right? I'm returning all the $5 million, so all the people who gave me their money, and I'm returning them a little bit of profit at the end on that. So let's say an extra 100 grand I'm returning them. So I'm giving them their 250 back plus an extra 100 grand, so 350 grand I'm giving them back. Plus I did a cost seg that gave them 150 grand back, right? So you can see, start to add up nice. Plus all the distributions I've given them, probably giving them close to about $700,000 back already by the time I'm at the end of that, okay? So you could do other things where you could sell the property, go, hey, we're going to sell it. I'd say by then you own so much assets, you're going to end up buying it a third-party side and keep it and stuff like that. You could do things like that. But the only real way to get out of it, you can't really do a sweep. Again, all that stuff you're talking about, the refi, take that out because the refi is just to give the investors the money back. The sweep, you're kind of the same thing. Bridge loans, all that stuff. It's all short-term stuff, right? Again, what you want to do is get people cash back. So the long term is what we go after. Okay. The sales stuff, the only problem with that is if you do it within the same year, I've taken 250 from you, I'm taking 50 grand from you. I sell the property, I end up writing you a check back for 100 grand. The problem at 100 grand on top of that money, that's ordinary income. It's taxed a lot higher. And depending on what state you're at, even in Texas or in California or Connecticut or Boston, some of these, Massachusetts, Chicago, and all these places where they have a little bit heavier taxes. Okay. The problem is now it's like you basically, you screwed yourself a little bit. So we don't really want to do that. You want to let what we call incubate. Let that money really incubate. And when you do the refi, give some of that money back on the refi, right? And the only way to do that, Steve, is to really elevate that rent roll. If the rent roll is 200, you want to try to, bring it up a couple percent. So if you can get up to, if it's 200 to 300 or 400, okay, then you want to refi it because now the property is making more money. It's worth more money. Then you can refi it for more, okay? So, but really what you want to do is you want to be able to do that refi, get that money to the investor to then go, hey, here's my next deal, plug it into that next deal, okay? Another hard thing too is 1031. I know somebody in another group earlier asked about the 1031 exchange. The only way to do a 1031 exchange means every single investor. So if I'm doing this deal and I have 15 people with me, all 15 people have to agree to exit the deal and park that money somewhere else. That's the only way you're doing a 1031 exchange. A lot of time people just want their money back, okay? So just keep that in mind a little bit. That's really important that, you can ask everyone that, but it's better just to give people their money back, makes them feel happy, and then let them decide what they would like to do with that, okay? This is great, thank you. This is part of the missing piece I need. I was trying to Vexers out. Steve, if you would like, Steve, if you have your camera, I would love the little thing you just, I would love for you to come on live real quick right now and explain your little story. You said you're trying to exit investors was one of the stickiest points where I was collapsing cash flow. Steve, would you be okay coming on real quick and just telling exactly what happened in your scenario? If not, it's no problem. If not, no problem. But again, everyone's on here learning about this. All right, next time. Hey, Steve, if you're not part of our program, I don't know if you're part of our program. I'd love you to be part of it. Chat with my team. If you guys have questions, media@commerceparknj.com. That's my team. Also, you could just join right there, Steve. This is really, really, like, people like Steve come to this program and have major, major impact for people who are learning this industry, okay? There's plenty of people on here that are part of our program. You have people who have money and are trying to find investors. You have people that are straight up just trying to learn from scratch, okay? That's the great thing about all this, okay? So we teach everything from the basics. And again, I know some of my classmates have reached out and they said, oh my gosh, Spencer, it's getting so boring because I feel like we keep repeating myself. And then I do these once a month where I give out a free course. People learn so much, and then they're like, man, I go back to the course and we're back to the basics again, because everyone's at different levels. Okay, last week, one of my complaints was, Spencer, I really want to learn about land development. I said, okay. So one of the guys says, you want to learn about land development? Tell me what you're working on right now, and I will literally change my slides and change my program for this Tuesday for some land development. Guy got back to me with a couple things. I said, you know what? I don't feel as though you're ready to talk about land development, but let's do this. I'm going to make a slide directly to it, show up at 6 p.m. Guy buys the course. He's there, he buys the course, never shows up to the last Tuesday at 6 p.m. So I'm literally trying to make sure I can work in what I need for you guys. And some people don't end up showing up and putting in the time. Okay? This is, for me, it's not a money grab at the end of the day. For me, it's to teach you. All the money we make on this literally goes to the back scenes of everything. The technology, the team, the boards, everyone getting educated on this, okay? The staff that comes here during the day-to-day to learn and to help teach you guys all this stuff, they get all paid to do this. We do this because we love this, okay? So, you know, Steve, I was able to answer your question in what, about less than 10 minutes? Okay, imagine what I could do in 12 months with you once a week. Guys, imagine what I could do with you looking at the camera right now. Imagine what we could do with you in 12 months, once a week at 6 p.m. And what happens is, when you're done with the course or you have something that comes up, emergencies, we all have things, okay? I was an idiot and broke my shoulder on the ski mountain on a Friday. Tuesday, I was still in the course. I was run down, but I was there making sure I can give you guys the best content I can, okay? I am here all the time. It doesn't matter where I am. I like to be in the studio to give you that, okay? I have plenty of testimonies. I started a construction division from scratch, and I have a guy who's with me. I'm going to show you guys next Tuesday that testimony. It's insane. His name is Kurt. He started with us. He started investing. He started learning a bunch. And I want to show you what he's been able to do in the 4 years of being part of our program. And he's still part of it every single year. He pays in to be part of it and learn something new. I'll tell you right now, that guy's been with us for 4 years on our program. He owns over 100,000 square feet of industrial. Okay? He's been able to use some of his own money, investor monies. He's done amazing. And he's going to come in here and speak about that a little bit and just show you the power of taking time, going through these courses. And the courses I used to do many years ago would be once a month. And that was it. I just do it that month, and that was it. Then last year we did a 6-month course. This year we're doing a 12-month course, the cheapest we've ever done it, to try to expose more people to this industry, because the biggest problem I've noticed, like Nick said, it's all math. Okay, that's all this is. It's simple math. And the thing is, there's not, if you want to change your 9 to 5, you need to learn the simple math. You need to put in the time to do this. The reason you're so well at your current job, wherever you are right now, is because you do it every single day. It's repetitive every single day. So every single day, the more I'm like, hey, have you done this? Hey, have you done that? You will get better at this. This other guy was a vice president of a company, making a really, really nice living. He was there for 3 years and left and started a construction company with me, okay? And he had plenty of assets before that because of my program. So he was able to leave that and come work for a company that I started. He makes no money with that company. He's a partner in it, and still do all his real estate stuff, okay? So believe it or not, some of the mentors on here I've been mentoring have now come and worked with me because we've had such great success. Nick is one of those people. Nick learned all about this. His first year with us, he was able to buy his first property from an attorney, okay? And he asked the attorney, I know you have another building down the street. Are you interested in buying that? How long did that deal take to close?
Well, they were probating the will for a good amount of time, but it was
About a year? Yeah. So guys, don't be discouraged. That's from an attorney. He didn't even have to speak to a broker or pay a commission. And that was a 10,000 square foot building, right?
Yeah.
It's about 10,000 square feet with a tenant in it and already cash and cash return. We funded that deal so quickly because we were able to find somebody who was already in the building. It was 10,000 square feet. So everyone could do this. It's not hard. Again, the rich aren't hiding anything. What they're doing is just staying quiet about it. Okay? I don't need to stay quiet about it because most of the times, you know what happens? I could sit here and I could coach 300, 1,000 people, 300,000 people. Most people don't take action and some people do. And the people who take action have proven it on this course, and some of them even work here now. All right, guys? So what I'm going to do is I'm going to hang out a little bit. We've been on here for an hour and a half already. I know some of you have been on here for a while. I appreciate all of you who have been on here, especially my students who are on here right now who've been working really hard. Again, all those webinars are live, and then they're put inside of the portal, and you can continue to watch them every week. You get them for your lifetime. The slides, the webinars I go through, everything's recorded. You keep it. Some of the stuff we talked about today will be going in your portal, okay? On Tuesday next week, you'll have access to it. Last thing I'm going to show you is this is our 12-month report from Pass Goes On. I show everyone this, okay? This is from last year. We did our 6-month course, okay? We had 150 people enroll. Okay, listen to this real quick. 150 people enroll, 135 active participants in the course. 15 people did not participate but paid. The course was a little over $3,000 for 6 months. If any of you have clicked on that link, you can see this course is not that much now for a 12-month course. Okay? People who purchased their first industrial building, 40% of people did that in 12 months. Okay? That's 54 people. Improved existing buildings. So people who own buildings already, who need help with brokerage, property management, NOI help, okay? 30% of people were able to achieve growth and change in that. That's 41 people. Building deal pipelines and broker relationship. Just like I did on that call, just calling brokers and starting to build up a deal pipeline, 40 people did that, 30%, okay? This is out of 100 out of those 135 people that participated. Total with measurable progress. So people who totaled like progress, had major progress that they never had before, educational progress, learning progress, all that. That was another big percentage of that as well. So that totals to about 100%. All right, now the people who did not have the success rate, right? So that 10% did not attend a live session or watch replays. I can see it all on our portal. At the end of the year, I ask who did and who didn't, okay? Did not complete broker outreaches or deal reviews, okay? So straight up, if you are part of these courses, you can have the success rate. All right, it doesn't matter how old you are. I have guys who are in their 70s who are part of our program, 60s, and I have guys who are in their mid to late 30s. So guys, again, this is straight from our system, okay? If you want to be part of this, click the link below, join us. I will continue to do these live ones for free to give you guys backgrounds. Every time I do it, every month, I do a little bit of calling the brokers so you can see how easy it is. I don't call the same brokers, okay? I don't call the same people. I called different brokers in different towns. The last one we did it last month, okay? I called a guy in North Carolina. This guy still blows me up to this day, okay? Never once did he say, hey, what's your qualification? I just said, hey, it's Spencer. I've maybe went to Charlotte Airport, but I've never, ever looked at property in North Carolina. Same with this Austin one, all right? I got so excited about Austin deals that I literally am going to look at buying some deals now because of you guys being on here, all right? So again, if you want start.pascalzone.com/join. Okay, that's start.pascalzone.com/join. All right, guys. If you do the pay in full, if you do the pay in full, you get the 45-minute free consultation with me. You can talk about whatever you want, your marriage life, your dating life, whatever you want to talk about. And then you have the 35-minute underwriting with me where everyone typically does that package, and at the end of the year, they execute those two things when they start having some deals and they need a lot of help, okay? All right, guys, so I'm going to leave it like that. I am going to, let's see. Should we bring up that sheet real quick? I want to bring up that sheet so you guys can see it. All right, guys, there you go. Take a look at this. Get joined, get signed up. We'll see you in a month if you want to come back to the free one. If not, if you want to get dialed in and ready to go, join right now. It's in the chat. We'll see you Tuesday at 6 p.m. every single week. All right, guys.